then once it turns around, we're going to see gold, silver miners rocket higher. And I mean, we've been waiting for this precious metals for a long time. Yes, it's trading up near the highs, but the next major, I think, major rally in gold and silver bullion prices is going to come in the next few months.
Welcome back to GoldCore TV. I'm Dave Russell, and we're taking our monthly look at what's going on in the precious metals charts. And this month, I am joined by our returning guest, Chris Vermeulen of thetechnicaltraders.com. Chris, welcome back.
Hey, thanks for having me, Dave. Always a pleasure.
Always a pleasure to have you here as well, Chris. Let's have a jump into the gold price. We've seen things trade relatively range bound and sideways since about March, and we've had a new all-time high, but since then we're going sideways. What's your read on the charts and the gold price?
Yeah, gold is definitely struggling. I mean, it's exciting that it's up near all-time highs, but when we zoom into the actual chart, we get some pretty bearish looking price action looking forward the next potential 3, 6, 8 months. And that is simply, we've got these topping candles, these long upper wicks, which we had 2 of them really back to back here, which are kind of called a tweezers. And what that's telling us is prices has gone up, and then big sellers have stepped back in and crushed price. And typically you see, about a 3-bar move to the downside after a reversal type of bar. So we are looking for looking at lower prices for gold and silver and over the next couple of months. That's kind of the short-term view. Definitely.
Just quickly ask you, each one of those bars, what time frame do they represent?
Sorry, yeah, this is a monthly chart.
Okay.
So each one of these, we've seen a different push up on news, and they've all kind of stalled out of the same area. So each this is a pretty long-term time frame. You can see the years on the bottom of this chart here. So we're looking at, I think we're going to have a pretty exciting time in precious metals, but it's probably going to have 2024 at the bottom of the chart. I don't think it's going to really happen this year, which is fine. It's building up energy, and it's just working through the current cycle phase. But when we look at this chart, if we go to a longer term time frame, we're in kind of we had started a new super cycle to the upside over here in 2019. And I think we're about to go into a bigger correction in terms of the overall financial markets. I think we're going to see a lot of stress, and that's most likely going to pull gold back down. We're going to go into, I think, a bear market in the stock market, and we're going to see something similar to gold that we saw in 2008. We saw gold pull back quite substantially during the bear market, because almost all assets go down during a stage 4 decline, a full-on bear market. And precious metals and miners will probably be one of the first pockets or the first set of assets that bottom before the stock market does. And then it's going to head off to the moon. And so that's what I think is going to happen. We're going to see some selling pressure for several months, but then once it turns around, we're going to see gold, silver miners rocket higher. And I mean, we've been waiting for this precious metals for a long time. Yes, it's trading up near the highs, but the next major, I think, major rally in gold and silver bullion prices is going to come in the next few months after we have a bit of a downward kind of spiral here.
So we still got a bit of work to do on the gold chart before we start to see this trend higher again and confirm breakout above those all-time highs.
Yeah,
I mean, we've seen a number of attempts at those all-time highs, and you're always going to get that resistance, particularly when it's such a significant price point, a new all-time high. It's not going to give up that ground easily. So you're thinking more now in 2024. If we change our tack and have a look at silver, is silver suggesting something similar, or has the silver chart look?
Yeah, they're generally going to move together. Silver's been pulling back and consolidating. If we see the stock market kind of sell off, we go into a recession, we're probably going to see silver come back down and have a pretty substantial pullback as well. They're going to move more or less in sync. Silver has a much larger percentage move to the upside and to the downside, so it's just more volatile of an asset. But overall, it's got a similar pattern where it is, it's had a very big bottom and break here in 2020. It's popped to the upside. It's flagging sideways, just like gold. It's just a bit different of a pattern, but it still points to higher prices in the long run. I think the The bottom has been carved out on the price charts, and now it's building a launch pad, which still could take some time for it to really start to rocket higher and head up back to that, $50 range, and potentially beyond in due time.
I suppose that's the difference between silver and gold, is that we are really only at about 50% of the all-time high that we saw back in the last cycle, aren't we?
We are. And yeah, the fact that silver is down that much, and it tells me that I think we're not seeing the big breakout yet. I think we would see not only silver performing very well, but we'd also see the gold and silver miners. They should be hitting like new all-time highs right now. And they are down like 45% or more from their highs. And the fact that these leverage plays are underperforming gold, just to me, is just gold is not going to make the breakout yet. We're not quite at that point. And gold is holding up really well because it's one of the slower moving assets. You can put more money in something that moves slower. And so people are rotating there. We had the financial crisis, people worried to store money in the bank, so they might be buying some physical gold. And the whole world sees gold more so as a currency, as an asset, than silver, because silver is a little bit more of a speculative play for big money investment. So that's why gold is holding up. People keep naturally rotating to gold. If you go to the average Joe investor who doesn't follow the markets, they have an advisor, they don't know much about investing. If you ask them, well, what's something else you want to buy? They're eventually going to be like, I guess gold. And that's where money has been going, and why gold's holding up and much better than silver. So I think we just need to put our time in, let the market work itself out. But we're going to see a lot higher, I think, gold, silver prices down the road.
Two other things that I'd really like to take a look at that'll give us an idea of the strength of the economy now and expectations going forward. One is the oil price. And then after we have a look at that, I'd like to take a look at whatever stock indices that you think is really giving us a clue as to what's going on at the moment.
Sure. Yeah. Well, the oil chart's got really interesting price action. So just to go back really quick to one other aspect, which I think is really an eye-opener for a lot of people here, that is to quickly look at the stock market cycle, which is this blue-green, and the economic cycle. And the key here is to realize the last two kind of commodities or assets that do very well before the stock market puts in a major top and starts a huge correction is the energy space and precious metals. 2022 was the year for energy, precious metals. This year, gold is pushing up near the highs. So those are the last straws that are going to break the camel's back before we start to see this next dive. So if we go back to this oil chart, take a look at what happened to oil in 2007, just early 2008, just before the stock market topped. We saw commodities do very well. Oil led the way. We actually saw oil lead the way with a huge double top in 2022. It's already fizzled down, and it's now threatening a very critical level on the oil chart, where I think oil could slip down to $40 or $35 a barrel if this level breaks. And if we go back to the previous major stage 4 kind of bear market, oil had a consolidation here. It came down, it had a bounce, and then once it broke this level, it really went into a nosedive. So this level and this level are very similar in terms of telling us that oil's had that push higher. It's now rolled over. Precious metals are testing up near the highs right now. Gold is anyway. And so that's the key thing. Both of these commodities, I think, have had their blow off top, or they're at a topping phase. They're the last commodities to hold up really well. And then I think we're going to see them go lower. The only thing really bucking the trend right now is the equities market and how it's moving, because I think a lot of it has to do with AI stocks really getting people's attention, and it's a tech heavy market right now, holding the stock indexes up. And the underlying, if we look at the NASDAQ, for example, real quick, the NASDAQ is going back up. The NASDAQ might even put in a double top here, a major double top, which will be very, very bearish if it reverses from that point. But when we look at the majority of the stocks and look at the Russell 2000, this is what typically leads the way. The Russell 2000 has sold off. It's been trading sideways in a bear flag pattern, and a bear flag pattern means it's just a pause before the trend continues. So we're looking for potentially.
Again, I'll just ask, what's the time frame on each of the on those bars then?
They're all monthly charts.
All monthly, right? Okay.
Yeah. So we're most of the stocks are struggling right now. On Friday, almost all sectors were red and down. The technology space was up, and the indexes closed positive. So people think the stock market's really is going up, which the indexes are. But anybody who's stock picking and has a portfolio full of individual stocks are probably struggling, and their portfolio has been trading sideways for the last year, and it's on the verge of potentially going a whole lot lower. So if the stock market sells off, it's going to pull. We're going to see precious metals come down. There's going to be a lot of selling pressure, and we're probably going to see the US dollar rally. The dollar loves to rally when we go into a major stock decline, and that is going to also add pressure to the metals to go lower. Dollar rips higher, metal goes lower. And all those things happening to me is really good. I would love to see all this happen because it's going to put the perfect storm in place, the perfect setup for the next, what I think is going to be a major move in precious metals that could last 3, 5, 7 years to the upside, just month after month. There'll be some pullbacks along the way, but it is going to be an incredible run for anyone who's holding precious metals. And it'll be interesting to see what happens at that point to the US dollar value, because the dollar is probably going to go into a huge slide, just like we saw back in 2000, where we were back in with the dollar index. The dollar, topped out in 2002 and then sold off. And that's where gold put in its major top, was when after the dollar had sold off. I think the dollar is going to go back up as the stock market falls. Gold's going to pull back this year, and then it's going to top, and we're going to see the dollar collapse. Precious metals will be the safe haven play to be in for sure going forward.
So for those that have missed out on gold's run so far, there still will be opportunities presented to them very soon. Now, I can't let you go without talking about what's over your left shoulder there. Tell me a bit more about this book.
Yeah, I just published this book called Asset Revesting, and it's a different way to invest. It's the exact opposite of the buy and hold strategy. So the buy and hold strategy, I explain in this book all the weaknesses that come with the buy and hold strategy. There's a lot of silent killers for people who want to get to retirement, who are retired. There's two different types of drawdowns that cost people time and money. They fall into sequence of returns risk, which people don't know about, and how that is like the number one reason why retirees run out of money in retirement. And the strategy is based around holding only assets that go up in value, and it's following price action and managing positions. And so we're always in one asset at a time, whether it's in the stock market, we think stocks are going higher, they're trending higher, or we're in bonds, or we're in the US dollar ETF, or potentially just sitting in cash. We'll never hold something that's going down more than a few days because we're following the price. And the key here is to make sure that you're not holding something that is deteriorating when something else is going up. There's even sitting in cash. People don't realize it, that sitting in cash, your account is still growing. I mean, we're still making, 5% return in a brokerage account, depending who you're with. 5% is a lot better than losing, 15 or 20% if you were to hold a stock or a commodity or anything like that. So cash, your account is still going up. People don't realize you're actually still getting wealthier. They don't think they're keeping up with inflation, which technically you're not, but holding on to something falling, you're definitely going in the wrong direction a lot faster. So it's a strategy about preserving capital, number one, and then finding the assets that are going up, and the profits take care of themselves, because the buy and hold to me is the most risky strategy anyone could be using who's like 45 plus. It's the perfect storm. People right now, there's more retirees or more people 45 plus. They've got record amounts of wealth, and Murphy's Law is the worst thing's going to happen at the worst time. And there's nothing worse than just hitting retirement or being in retirement and then watching 30, 40% of your wealth evaporate, and you got to downgrade your lifestyle. And it's just not worth it. So this book is all about protecting your capital, and the gains will naturally take care of themselves. And you don't have to worry about really what happens in the market, because we're following the price. If it's going up, we're long, just like right now. If it's going down, we're profiting from falling prices, or in a different asset that is rising while the stock market's crumbling. So that's
where
how
can our
we
viewers get their hands on a copy of that book?
Yeah, they can go to Amazon.com or .ca or whatever country they're in. They can pick it up at Amazon.
Fantastic. Chris, as ever, it's fantastic having you on and chatting charts, and I look forward to the next time you're on. But for now,
Thanks
for
Dave.
joining us on GoldCore TV.
All right, take care.